Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Friday, April 17, 2015. Inside the numbers tonight, we're going to discuss what happened to the S&P today. We'll do the SPY and the EMini contract. We're going to talk a little bit about China, a little development there, and we'll do crude oil. We'll talk about the gold market. We'll do interest rates in the bond market, and we'll discuss the U.S. dollar, and we'll give it a wrap for the week. All right, so let's get into the action. So today was a pretty solid down day, and you're looking at a daily chart of the SPY, and remember these purple lines that I've had in here pretty much all week. Earlier in the week, when we went down and we hit, let's see, it was 2075 in the S&P E-mini contract, and I said, is that good enough? And I said, I don't think so. And then last night, I gave you the bookends. Remember the bookends? I said, if we closed above, what was it? 2105. It was the high, 2105. It was 2104.75. So I said, if we close above 2105, that's very bullish. But if we close hourly and daily below 2090, that was bearish, and we were in the middle of that range last night. We were at 2100. Okay, we closed, or this morning we opened below 2090, and that was all she wrote, right? Or we closed below, and then let's see what happened. Let's go to the E-mini contract because we can see the intraday activity, and you can see how important that number was. Watch this, okay? We had 2090 was the important number. Okay, so 2090 is up here. All right, so 2090. All right, we came down to 2090, and it's right in this neighborhood here. Okay, we tested it. We tested it again on the upside. We broke below. We came back to test it again, failed, and right down all day. Okay. And we came down to the 2070 that I had given you earlier in the week, and we even came lower than that. And what that means to me is that there could be lower prices ahead next week, maybe even down to the 2055 neighborhood and even down to the double bottom, the elusive double bottom, if we go to the daily chart down here at 2030, right? So the jury's still out on what happens in terms of the downside, but what I can tell you is that whatever work on the downside we're going to do, we should be finished sometime on or before Wednesday. And I'll give you more on that early next week, but that's a little bit of a tell. That's good news if you're long, if you're bearish. I'm sorry, if you're bullish, right? Because I think if there's any more downside to be had, we should be finished within the next couple of trading days. And it could be low. We could get down there. We could have a good old-fashioned thrashing. We could have basically a watershed decline. You never know. But it should be finished on or before Wednesday, okay? But we'll have to see how the early next week sets up and where it takes us. And then, again, based on velocity, based on money flow, based on the numbers we hit, we'll have to determine whether or not, what those lower prices are. So let's go back and look at the next level of support. So we came down and we pierced the 27. Oh, let's go back to the E-mini. The SPY. So we pierced the 207.50 and we rebounded off of it. So that proved to be pretty good support. So the next area we have is 206. Then we have 204. And then 202.50. Okay, and then there could be lower than that, but that's what we have. In fact, the 202.50 is probably just going to give way to the 200 period moving average next week. In fact, I'm pretty sure of that. So if you go to the E-mini contract, sorry to bounce back and forth, but I want to give you the numbers that are important. So 2070 was important. We had that in here earlier in the week, from earlier in the week. We bounced off of that today. The next area is 2055, right? I just told you that one. And then 2020. So even lower than 2030. I've calculated 2020 as another downside target if we should continue down next week. Okay, so that's it. If we don't, then the most important number you could know on the upside is 2105. So if we close hourly and then daily above 2105, higher prices are coming. So the market remains very simple. If you want to talk about the numbers, it's just math, right? They're just numbers on a piece of paper, numbers on a chart. I've given you the numbers. You've got them on the downside. You know where the market gets bullish. That's it. There's really nothing else to do other than know those numbers. So can you go long in 2055, 2020? Sure. You have to know what you're going long into, right? You have to see the pattern that's developing. You have to see the velocity that's taking place on the downside. Is the market putting in an hourly bottoming signal? Okay, let's take a look at what that might look like. Here's an hourly bottoming signal. On volume, we go low, finish close to the high. Okay, those type of signals are meaningful. Here's another one right in here, same deal. Okay, here's another one, same deal. This is an hourly bottoming signal. Okay, so it's not just the number that's important, it's how we get to the number and what the market does and how it reacts in and around that number. So while I'm giving you a number, you still have to understand how to trade the market. You have to look for other signals that the market's telling you that it's ready to go long or ready to go short. The market tells us what to do. The number's there as a guide, but there's other indicators you have to know and be aware of to look for in order to take a trade in the market, and that's very important. Okay, China. If I look at FXI, which is a proxy for China, it's half Hong Kong, half China, but you're really overnight the Chinese market didn't do anything, but after the market closed, look what happened. China was actually down over 5% today on our U.S. market, the FXI. Because what they did was, they did one thing for sure, and then I think they did something else as well. The one thing for sure was they're opening up shorting into the Chinese markets. Now that's healthy, folks. You shouldn't have a market where you're only allowed to buy stocks, you're not allowed to sell them, right? Selling stocks, and when I say selling them, it's either selling them if you're long or selling them short if you don't own them, is called price discovery, okay? If I think Walmart is good trade on the upside, if I think higher prices are coming in Walmart, and somebody else thinks lower prices are coming in Walmart, and they decide to sell it short, we'll see who's right. But that's called price discovery, and that's why there's two sides to every market. And the Chinese market was almost artificial in that there was only one side to it, right? Look at the weekly chart. There's only one side to the market. Now this week, today, the market finally pulled back. But even if you look at the daily chart, that's a 60-minute. If you look at the daily chart of the FXI, okay, up until 52.5, this was a runaway market. But what was I telling you? The other day, I was telling you that, as I always do, the market was getting too far from home base. What's home base? The 20-period moving average, or the red trend line. Now, if the market was getting too far from home, what happens? The market has to come back to home, and or at the same time, the 20-period moving average is creeping up, and it will go higher as long as the market stays in this range. But today was the first indication that the market is beginning to come back to home base. Now, what happens next week, we'll see. I think there's more downside to be had in the Chinese market, but once we get close to home, then you're not going to want to be short anymore. You're going to want to be taking off those shorts because you're going to start to find support in this gap area here. This gap fill and the 20-period moving average are going to find support in and around that $46.5 to $47 neighborhood in FXI. Okay? So, China institutes allowable short selling. Doesn't mean the market's going down Monday because they're allowing short selling. It's just healthy that they're allowing short selling. And I think it's an excuse that the Chinese market sold off today, at least on our New York market hours, because it needed an excuse to pull back and work some of the overbought condition off. And that's really all that happened today. So that's what happened in China, and I wanted to make mention of it. Let's go over to the gold market. The gold market had a little bit of a creep higher today. We're looking for 1215 to 1220. We're looking for 1215 to 1220 next week. If we don't see it early next week, something else is developing. It's pretty much that simple. Okay, if we begin to close hourly below 1200 early next week and the market looks weak and we don't achieve 1215 to 1220 earlier in the week, meaning Monday or Tuesday, something else is going on and I'm probably not looking for higher prices. I'm probably looking to cut and run, right? Cut bait and run. Lower prices coming if we don't see 1215 to 1220 earlier in the week. That's the way I feel about it now. We'll talk about it Monday, but that's what I'm looking for Monday. If I see weakness, I may just cut and run. I don't like the way the gold market is behaving. That's not to mean it can't shape up and have higher prices. I just think it should have been underway by now. That's just my take on based on how I read markets, based on my calculations, my indicators, and what I think should be taking place is not taking place. Okay? Maybe it takes place Monday, Tuesday, Wednesday. We'll see what happens, but that's what I see. Let's go over to the crude oil market. Top end of our range. We're hovering. There's nothing to do yet. If we're going to take a short, we're probably going to have to see the market get to the $58, $60 area, and it has to tell us that something is developing in terms of a topping signal when the market does get there. So there's a little work to do, but the market could certainly put in a bullish consolidation base here and build some pressure to go higher. And we could achieve that $60 area early next week. We'll have to see. Right now, it's not telling us that anything definitive is taking place one way or the other right now. But when we get there, we'll know it when we see it. The market will tell us what to do, and then I'll pass the information to you. We can take a trade just like we did earlier in the week in crude oil and make some money, profit, and go on about our business. Okay, bond market. I don't see anything going on in the bond market that tells me, just like oil, like I want to take a trade right here. Bond market was up a little bit today. That's the actual bond market. Let's look at the TLT. It was up a little bit, but the top end of our range is still going to be 132.5 to 133. And what we do when we get there, just like the prior market, the market will tell us what to do. And we'll look for a signal. The market gives us a signal. We take the signal. We act on it. We put on a trade, and we make some profits. And I'll pass that along to you whenever I see the signal. Right now, the bond market remains in the middle area of the range of this low to this high, or this high to this low. We're right in the middle of the range. I think it will break out. Which way, I'm not definitive on yet. I have an idea, but there's nothing definitive telling me that I have enough information to pass along to you. There's no point in jumping the gun. Let's go to the U.S. dollar. The U.S. dollar was a beautiful trade this week. We had a trade from 100 cents on the dollar down to 98 cents on the dollar. The market hit the 50-period moving average this week all the way down at 97.28. Actually, the dollar made a low of 97.17 and bounced off that level. I think the dollar is ripe to go higher next week. I think that the market could start to rally as early as Monday, and I think that we should be rewarded on a bullish dollar trade into next week. So the market did give me the signal. Okay, it did achieve price target on the downside. The market is telling me what to do. It told me to be long the dollar, so I'm long the dollar, and I'm telling you. And that's where we are. So I think that's about all I have for this week. It was a pretty good week. We'll look for just as good of a week, if not better, next week. Hopefully everybody has a great weekend. Hopefully this information is helpful. I hope it is, folks. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.